Welcome back. Well, we are now in the final days of the year. We are closing the books on 2025 soon, but there are still two major decisions that we are waiting on. The Supreme Court decision on President Trump's use of tariffs, foreign emergency, and the president's decision on who will be the next chairman of the Federal Reserve. Luckily, we have the perfect person to talk about this with right now. Joining me now in this exclusive interview is the Treasury Secretary of this great nation, Treasury Secretary Scott Bessent. Secretary, great to see you.
Maria, always good to be with you.
Thank you so much for being here. So these two major decisions, SCOTUS decision on tariffs and the chairman of the Fed, will we get these decisions before the end of the year?
My guess is we'll see both of them in early January, Maria.
Whoa, well, that is a real disappointment. I was expecting in the next couple of days.
Well, look, we got to move at the right pace. And in terms of the SCOTUS decision, Maria, this is really a national security issue. When you think about it, the way President Trump has been able to use his IEPA powers for national security, if the Supreme Court goes the other way, it will be a loss for the American people. That President Trump, look at the drop in fentanyl deaths because President Trump was able to put fentanyl tariffs on China, Mexico, Canada. We have seen a substantial drop in the deaths. China is cooperating on fentanyl for the first time in more than a decade. When China attempted to put an export control on rare earth magnets, President Trump said he put on 100% tariff, and they immediately came to the table. That we are rebalancing trade, and this year, for the calendar year, we are going to shrink the deficit by several $100 billion. So economic security is national security. So this ruling is really a national security ruling. And if they rule against the administration, they will be ruling against national security.
And by the way, I really like the idea that President Trump's agenda is wrapped in national security. I mean, everything he does is about national security, from getting the supply chains to America to what you're talking about in terms of fentanyl. If the decision goes the wrong way, what are the alternatives? Will you be able to make up $200, $300 billion in tariff revenue that you've already collected?
But again, Maria, there are plenty of revenue alternatives, but they're not the national security alternatives. And as you said, with the supply chain, in terms of bringing those back, what we saw during COVID was the supply chains, these long supply chains were not safe, sound, and robust supply chains. And President Trump is using the IEPA tariffs to fortify our supply chains. So the IEPA tariffs, the deals that we've done with a lot of the European companies or countries, the pharma companies are reshoring in the U.S., and that's part of the trade deal, and that's all IEPA, because we get a huge amount of the precursor chemicals and drugs for our pharmaceuticals from overseas, and that's just not sustainable. So it would be a loss for national security.
Do you believe you can make up that revenue with these other statutes?
Yeah, again, Maria, we make up the revenue, but the national security loss is a huge loss.
I understand. All right. The president also said that he's leaning toward either Kevin Warsh or Kevin Hassett to lead the chairman of the Federal Reserve job. You said we're going to get both of these decisions in January?
It's at the president's pace. That he has been very, very deliberate. We had an interview last week. We may have one or two more interviews this week and next week. And then the president has been very direct with the candidates in the interviews in terms of asking them their views on Fed policy, Fed structure, the way forward, the economy. So it was very interesting. In one of the interviews, the president did as only he can do. He really came to first principles with one of the candidates, said, how many PhD economists are there? And said, well, 1,000 to 1,500. What do they do all day? Why don't we get better outcomes? Like, how do all these people help one person or the committee make a decision? There wasn't a good answer.
Well, the president told the Wall Street Journal last week that the next chairman should be consulting with him on interest rates while signaling that he wants rates closer to 1%. We've got some reports that have people pushing back on Kevin Hassett because he said he's part of the president's inner circle. Maybe he's too close to the president. How do you feel that these two are different, Kevin Warsh versus Kevin Hassett?
Well, Kevin Hassett is an eminently qualified PhD economist with a great background. Kevin Warsh and I've known both of them for 20 years, Maria. Kevin Warsh has a legal background, has been in financial markets. He's a former Fed governor. They both have experience at the Fed. Kevin Warsh as a governor, Kevin Hassett as an economist. They are both very, very qualified. And this idea that Kevin Hassett should be disqualified, if we go back and look, Janet Yellen was a CEA chairman. Lael Brainerd was vice chair of the Fed, and then she immediately went to the job that Kevin Hassett has now. So this idea that people don't have agency and can't make up their own minds is wrong.
This is a great point that you just made, actually. Look, I've spoken with both of them, and I know one thing that they have in common. They both want lower interest rates. Kevin Hassett was with me last week talking about productivity in the new year. Kevin Warsh was with me a couple of months ago talking about where the Fed has gone wrong. Watch this.
The Fed has lost its way. It's lost its way in supervision. It's lost its way in monetary policy. And all this big money on big fancy buildings is just another indication. Why does that matter, Maria? It matters because what matters most to the Fed is credibility. The Fed has to look like a serious, sober institution. And if you look back to where we were last September, the Fed cut rates 50 basis points before the election.
Right before the election.
Another 50 basis points after. Hadn't done that kind of thing around an election in 50 years. But what happened? Markets are smart. The Fed cut rates. Long-term interest rates went up almost a percentage point. That's because they're losing credibility. Whatever happens next, whatever decisions the president makes, the next head of the Fed and the Federal Reserve needs to rebuild that credibility. So when you cut rates, you know what happens? Rates fall across the yield curve so that small businesses and homeowners can start to afford things that are right now only affordable on Wall Street.
Because of the really big increase in productivity, I think we could be looking at a 4% productivity increase next year, given how much acceleration there is in AI. Then what happens is that workers are able to produce as much stuff as the firm needs without having to hire a whole bunch of new people. And so we're seeing that recent college graduates are feeling stressed right now. But our expectation is that this is something that's going to work out quickly. The AI economy is moving much faster than the dot-com economy of the 90s. And the coaches that AI is producing are going to help make a lot of productive workers a heck of a lot of money. And the bottom line is that we're seeing that real wage growth is really high again this year after being down $3,000 during the Biden administration. And so all this productivity is putting more money in people's pockets.
So your thoughts, Secretary, they're different, but they have a lot in common. What would be your reaction?
Well, my reaction, Maria, is that my focus during the pre-interviews was how are people thinking about the future and how are the candidates thinking about the future? And I think they are both thinking about what does an AI future look like? What does productivity in the U.S. look like? Because I think too much of what the Fed has done has been backward looking. The other thing that both candidates have said and other candidates have said is that the Fed has to reestablish trust. But in my opinion, the Fed has trust with three constituencies. It's the markets, it's the business community, but also the American people. It is an unelected institution, and it lost the trust of the American people when we had the greatest inflation in 50 years and maybe the greatest inflation for working Americans ever.
Yeah, and of course, Jay Powell's term ends May 15th, but we'll know way before then. Let me get your take on the macro story going into 2026, Secretary, because we're having all of these discussions about jobs, the economy showing real momentum with strong consumer demand. You're pointing to the deficit shrinking by more than $400 billion this year. What would you say we should be focused on looking at for the macroeconomic story of 2026?
So we should think that 2025 was setting the table. 2026 is going to be a bountiful year if the Democrats don't shut down the government, because they were unable to stop President Trump. They tried to stop him in the courts. They tried to stop him in the media. Then they went to the extreme. We had the longest government shutdown in history. It was a hit to GDP, slowed things down. We're still going to finish the year probably 3 3.5% GDP growth, which is incredible.
Unbelievable.
With a shrinking budget deficit. So we have very good momentum coming into next year. The economy is broadening out. You could see it. Other sectors of the stock market away from big tech are doing very well. But if they try to shut down the government, I believe that the Senate Republicans should immediately forego the filibuster, keep the government open, and let the economy do its thing. Because the one big beautiful bill, there are so many parts to that that are kicking in. We've had 15% uptake in capital expenditure. Capital expenditure historically always leads to job growth. We had the president fulfilled his promises to working Americans, no tax on tips, no tax on Social Security, no tax on overtime, and auto deductibility for American-made cars. There are going to be substantial refunds to working American households in the first quarter. They will change their withholding. They will get an increase in real incomes. So I am very optimistic that for working Americans, for job growth, for capital formation, but we cannot let the Democrats shut down the government.
Well, I think this is really important, what you're talking about in terms of the impact of the big, beautiful bill. What I've been talking about with regard to the big, beautiful bill is the options to expense things. I mean, we had people on the show earlier, Mitch Rochelle said he knows people who are expensing computers, they're buying cars, they're buying stuff for their businesses, and they're expensing it. How significant is that? Explain the significance of these expensing options in the big, beautiful bill.
Well, one of the best ways to increase productivity is to increase the after-tax return on capital, and we're building up the capital stock by doing that. So, Maria, you should just think of the 100% expensing as pulling the rubber band back. So the Democrats wasted a lot of money, whether it was the misnamed Inflation Reduction Act, or there are other.
Well, it was $7 trillion in spending, sir.
And what do we have to show for it other than a mountain of debt that we at Treasury have to roll all the time? With the expensing, you are creating capital stock that will increase jobs, increase productivity. So they pull the rubber band back, and then it moves forward. So we're getting new, as you said, new cars, new trucks, new computers, and all that increases GDP.
Yeah.
That's what Kevin Hassett was talking about earlier. When he said he thinks that there could be this big productivity boom in 2026. And back to Fed chair, I think we've got to have someone who has an open mind, that you don't want to, that they break this idea that often the Fed has, that growth creates inflation. Growth does not create inflation. The friction creates inflation when there is more demand in the economy than supply. And the administration has done, President Trump's unheralded policy is deregulation. We are creating more supply across everything.
Yeah.
Like, look what's happening with oil prices with the president's energy policies.
Well, the energy policy was so critical in terms of reining in the price of oil. But how do you explain this new stress that we're talking about that keeps showing up in all the polls, that people are stressed about housing, stressed about the cost of food? What is the administration's plan to rein in the cost of food and housing?
Well, Maria, people should be stressed because this Biden inflation, as I said, it was worst inflation in 50 years. And Strategas, the brokerage firm who you know well, had something.
Jason Trenner.
Jason Trenner had something called the Common Man Index, which was working Americans. So the accumulated CPI during the Biden years, called it 22%. For working Americans, it was 35. And that 35 was just a wipeout because it was groceries, insurance, rent, and the auto. And we are bringing that down. So energy, which leads everything, is coming down. Energy goes into grocery prices. So affordability has two components. So just like with the deficit, with the deficit, there are two parts to it. There's constraining spending, and then upping revenues, which is what we're doing, which is why we had this several $100 billion contraction. With affordability, I suspect that we are going to see a substantial drop in inflation in the first 6 months of next year. Rents are down. The story that the Biden administration doesn't want to talk about, the mass unfettered immigration, they have pushed up rents. especially for working Americans. There's a recent study out from Wharton School that shows every 1% increase in population, rents went up 1%.
Wow.
So President Trump, by enforcing the border, sending home more than 2 million illegals, we're now seeing D and C rents coming down substantially. I think that will continue for the rest of the year. We brought interest rates down. So we've seen mortgage rates down, and I think everything else will follow that.
So I think what I hear you saying is that it takes time to get out of 40-year high inflation. And what you're saying is this inflation problem is still ongoing because it's the president's efforts to rein back what Joe Biden put in place with 9.1% CPI.
Well, there's an inflation problem, but there's a price level. So the absolute price level got very high. And what I was talking about earlier, the other way to solve that is through increases in real wages, which I think we're going to see next year. And when we see the tax refunds, when we see working Americans keeping more of their paychecks, we're going to go back to the kind of economy that we had. President Trump, in January 2020, not only was he probably ahead by 8-10% in the polls, the economy was clicking on all cylinders, and then COVID came along. But we're going to go back to the kind of non-inflationary growth where working Americans do better than supervisory workers, lower income households do well. And it's not an either or.
Right.
I call it parallel prosperity. Main Street, Wall Street can both do well. And my guess is both have a very good year next year.
And you're just touching on something that the president said, that people are going to get double the tax refund that they expected. I want to ask you about that. They're talking about $2,000 additional in people's paychecks. So we'll take a short break. I also have to ask you about China. I'm talking with the Treasury Secretary this morning, and we're going to take a short break and come right back. Stay with us.